Hey guys, welcome back to the channel. In this video, we're going to talk about a new stock today, and I'm going to go over a little bit of information about it. We're going to look at the technical analysis on it. I'm going to tell you my plans moving forward with this particular stock, and just kind of go from there. And this is all kind of coming into next week on Monday, April the 28th is whenever I plan to execute this plan if all goes as planned. So before we get into it, just to reiterate, not a financial advisor. Make sure that you do your own research. And also, if you find value in the video, hit the like button, subscribe to the channel. That way, you can keep up with all of our updates that we put out. So, we're going to take a look at this Motley Fool article. We're going to go over this particular stock, which is APLD, Applied Digital, which is on the NASDAQ. Okay. Currently at about $4.71 a share. All right, and we're going to go through some info, and then, like I said, we're going to talk about what my plans are for it moving forward. So here we go. Applied Digital, a builder of big data centers, has been a major beneficiary of the artificial intelligence boom over the past few years. It originally rented out its centers to Bitcoin miners and other blockchain firms, but it's pivoted towards serving the high-performance computing, AI, and machine learning markets in the late of 2022. Applied Digital stock went public at $5 on April 13, 2022, and its share price hit an all-time high of $12.48 in February 21st of 2025. Over the past 2 months that followed, the price plummeted nearly 70% to less than $4 as the Trump administration unprecedented tariff policies, escalated the trade war, and other macroeconomic headwinds curbed the market's appetite for higher growth of AI stocks. With a market cap of $888 million, Applied Digital now looks reasonably valued at 4 times this year's projected sales. Could it be a great under-the-radar play on the AI market? So let's take a look. How does it make money? Applied Digital didn't originally build any servers or run any of its own cloud services. It simply built or bought big data centers, made sure that they were powered, and rented out its rack space to AI and cloud companies that installed their own servers. So, like Digital Realty Trust or Equinix and other data developers, Applied Digital seemed more like a real estate company instead of a tech company. But in 2023, it launched a new subsidiary, SAI Computing, to provide its own cloud-based AI service powered by NVIDIA's latest GPUs. Okay, there's a chart. We're going to dive into that on Thinkorswim here in a minute. Here we go. So why is it changing its business model? With the new SAI, Applied Digital believed it could launch its own cloud services for AI applications on top of its home data center infrastructure, but the strategic shift was odd for these 3 reasons. First, it costs a lot of money to build your own servers, secure a steady supply of NVIDIA GPU, and run your own cloud services. Secondly, Applied Digital positioned itself as a competitor to its own clients, which included Amazon, Microsoft, and other public cloud and AI leaders. Lastly, it seemingly contradicted its own plan to evolve in a real estate investment trust, which would require it pay out at least 90% of its pre-tax profits as dividends to maintain a favorable tax rate. It still isn't profitable on generally accepted accounting principles. Ramping up its spending on expensive GPUs and servers would keep its bottom line deep in the red. In the first time in months of the fiscal 2025, Applied Digital's total revenue rose 46% year over year to $177 million. Its cloud service revenue surged 487% to $71 million, but its data center hosting revenue fell 3% to $106 million as it lost some contracts, sold a facility in Texas, and struggled with power outages in the North Dakota facility. However, the cloud services segment only narrowed its loss from 41 to 32 million, while the data center hosting segments profited a total of $57 million, marking a significant improvement from its loss of 5 million in years earlier. That's why it wasn't too surprising when Applied Digital recently announced it would sell its entire cloud service business and continue transitioning into a REIT. It hasn't found any buyers yet, but the divestment could pave the way forward toward generating profits and dividends. Why could that change turn it into a great investment? Here's what we wanted to see. From fiscal 2024 to 2027, analysts expect Applied Digital's revenue increase at a compound annual growth rate of 47%. They also expect it to turn profitable on a GAAP basis by the final year. However, those estimates assumed it would continue to expand and grow cloud service segments. Without that segment, it may grow at a rate comparable to Equinix, which is expected to grow its revenue and earnings at a CAGR of 7% and 28%, respectively, from 2024 to 2027. It also became a REIT in 2015, Equinix I'm talking about, and pays a forward dividend of 2.4%. In other words, Applied Digital could revolve from a messy cash-burning company to a stable REIT that will profit from a long-term growth of the cloud, AI, and data center markets. The latter would be more appealing than the former if tariffs, trade wars, and other macro headwinds rattled the broader markets. Therefore, investors who are looking for an under-the-radar AI stock that may pay big dividends soon should pay attention to Applied Digital right now, which is what we are doing, okay? So we're going to take a look at the charts really quickly. So just to kind of recap, they were renting out data space basically for Bitcoin miners, AI companies, things of that nature. Started doing their own cloud computing service, decided now they're going to try to switch back and basically go back more into the focus more on the real estate sector to become more of a REIT company to pay out dividends, which is more attractive to investors, blah, 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 blah. And so now we're going to take a look at the charts, see what they're telling us, and I'll tell you what my plans are moving forward. Alrighty, so taking a look at Applied Digital, ticker symbol APLD on the 180-day 4-hour time frame. As you see here, a high of $12.48, a low of $3.01. And as you see here, we bottomed here again, hit that $3 mark and started coming back up here. Now we are hitting a crucial resistance level of 504 on the 180-day 4-hour time frame. I do expect it to pull back down because, as you can see, we still are in a downtrend overall. However, I'm hoping that this one last little push down will provide me to come in and buy what I want to buy, and then allow it to kind of do its thing from there. Because I do think the markets overall are going to, continue to start going higher. Specifically, probably this week, we have some major players doing earnings and everything this week. So potentially to start making the markets kind of rebound and start to push up fairly higher. And then all it's going to take is just a couple of announcements regarding the trade deals and stuff, and potential rate cuts. Eventually, that's going to make the market start going way back to the upside. So 504, first level of resistance, floor 301. After that 504, you got 663, 775, 866, 1025, 1248. Okay, now this thing here, again, my plan for this one's going to be a little bit different than what I do typically. I typically will come in and buy shares. And however, looking at an option for this one, and we're actually going to take a look at what type of option I'm looking to do, what my potential ROI would be if it indeed actually happens where I think it may go, and then just kind of go from there. So we're going to take a look at an options profit calculator, and I'm going to tell you the expiration date of what I'm looking at. I'm actually looking at two different ones. I'll have to decide before tomorrow which one I'm going to go with. However, both of them are going to be pretty much a low risk, high potential for reward, and have some really good open interest on both. All right, so this is optionsprofitcalculator.com. Link in the description below if you want to take a look. You just simply go ahead and put the stock that you're looking at, so APLD, you're going to get the price, and you'll see $4.69 is what it's currently trading at. And it's going to say buy or write. I'm going to say buy, and then select option. And then you're going to find an expiration date that you want. And then typically for me, for options, I like to go longer out. And I haven't really done many options, so this is going to kind of fairly be still kind of newer to me because I haven't done very many. But I was looking basically at 17th of October for the 16th of January. Let's just click this one just because that's the first one that kind of caught my eye. And it has a high of 12, 12.48. However, to get the option cheaper, because if it even gets to 12 and doesn't hit my full strike price, I'm still going to be making money. So I would go to $20 strike price. And as you see here, the 0.36, if you multiply that by 100, because basically what you're doing is you're buying a contract saying that you have like 100 shares of that particular stock. And so if you multiply this by 100, you get 36. So that'd be your total investment for one contract of APLD, saying your strike price would be $20 for January 16, 2026. And you can do that with the rest of them here. So like $44 if you say it's going to hit 17, $15, 57. If you think it's just going to hit 12, then $60 would be your overall investment there. So for me, if I'm going to spend this much, I'd much rather just get 2 contracts of this and then hold it for the rest of the year. And then if it starts moving and the market starts going crazy at some point and this thing blows past 12.48 and gets closer to 20, and that's going to be a pretty good deal. So I'm going to say this one here, one contract is $36 would be my total investment, and therefore my total risk of I'm just potentially losing $36. Okay, and so let's take a look and see what type of potential we can see here, and it gives you the stock's price range from where it's at now basically to where you think it might go. And then this is going to be a chart showing the potential amount of money that you can make based on the stock price and based on the month from now all the way until January 2026. So if, let's say, it goes to $5.50, as you see here, there's some potential profit of $17.27. But as it increases, look at this stuff here. So if the price starts moving, this is all the way in May. Let's say it would hit 12.50 in May. All right, like it did before, you'd have a profit of $730.56. This is a $36 investment. Keep in mind, let's say that happened in June. You're at $6.50, and as you see, the further you get, it's a little bit less money, but still a huge return on your investment. And then the further you get down, so let's say it takes all the way until January of 2026 to hit about $13. You're actually going to be losing money at that point because the expiration's about to. So you're gonna make sure you want to just kind of keep an eye on it. But however, $36 is all you can lose, right? Because it's all you're putting in. So let's say just by October, for some reason it hits. Let's say by October 1st it hits $18 a share. That's almost $1,000 on a $36 investment. All right, if it hits $13. For $13.50, it's $300 something. So huge potential for ROI on this particular play here. So I'm going to definitely look at doing at least one contract, and then let's say we did this one instead. Okay, let's say we did the October 17th, and let's call it for, let's say, $12. All right, let's see the difference here. All right, let's go back to that October, or let's say, well, this one would actually have to happen a lot sooner, but you can see, you can kind of just estimate of the amount of money that you could potentially make on the amount on the month if it does hit those specific prices. So anyway, and one thing you want to check on too, and this is going to be off of your broker, you're going to want to look at the delta, you're going to want to look at the open interest, you're going to want to look at the volume and all those types of things too, which is what really attracts me to this one here, the January 16th. It really attracts me. It has a lot of open interest, has a lot of volume, has a lot of things that you want to see in regards to options. So that's why I'm going to probably be leaning towards there. So I'll probably buy one now, and meeting tomorrow. And if it happens to fall lower, maybe buy another one, and just maybe grab several there and just let it hold. And then the worst case, you're out 36 bucks, and if you buy two of them, you're out $72. But worst case, I mean, that's nothing, right? If you have some money to invest and kind of play around with. But if if it takes off and it starts moving, then you could potentially make a nice really return on your investment, and then just kind of rinse and repeat and go put it somewhere else, put it back into a stock that you like, or if you find another option, do that. So anyway, I just wanted to give you an update on that of what I'm doing. Let me know your comments below. Other than that, we'll catch you in the next one.